Hi guys, I hope all of you are doing well. This is your Nifty Guy. Welcome to today's episode of Decoding Nifty with me. This is a series where we analyze and decode Nifty on multiple time frames so that we can tackle the next day's market with much more confidence and clarity. Do not forget to like the video, subscribe to the channel, share it with your trading friends, as well as put down anything that you might have to say in the comments box, be it feedback, be it criticism. I am open to everything. On that note, we'll start with today's video. We'll first start with what we had planned for the day versus what happened in the live markets and how did we tackle that. And we'll explain everything in depth, our entry, our stop loss, how did we trail the stop loss, if we did take an SL, where did we take the SL, and everything, right? And then we'll move on to the second part wherein we'll analyze and prepare the plan for the next trading day. So on that note, we'll start with today's video. So for today, what we had analyzed and planned was that we are looking for a short entry below this and a long entry above this, right? On this day, on 19th, if you would have watched the video, we had taken two stop losses on this day, and this was a red day for me in a very, very long time. I am a very cautious trader. I usually do not end up in red easily. Even if the first trade is red, I do make up for that in the subsequent trades, right? But after a very long period of time, this was a day wherein I closed in red. And did it impact my psyche today? Absolutely not. Was I prepared to handle the market with the same confidence? Absolutely yes. And the only reason for that is the kind of back testing that I have done with my setups. And that is the reason the confidence that is coming to execute those trades. Right. Even on this day, I had done everything as per my setup. It was just that it was not my day, and it will happen to the best of us, right? So uh, let's just start with the analysis here. So markets opened with a gap up, and I had already mentioned in the video yesterday around that if we open with a gap up, it would trap many people who would have taken overnight shorts. Market moved up above our buy zone, gave a dip, and this was the entry candle. Now, what is the difference between this particular trade versus if you watch the last couple of days, there were certain scenarios wherein market had come up to our zone where we had planned an entry, but we still did not take those trades. The simple reason was I had told you we need to look at where the market is coming from. Is the market exhausted or has the market got room for the further run up or run down, right, in your direction? But today, market had only traveled a very small distance compared to what it had done in the past couple of days. And that is the reason we could take this particular trade. And this was a very good high conviction trade. The pullback also was a kind of very, very cool pullback. It was not a concerning pullback, as in not too deep of a pullback. And that was the reason why this breakout candle, I entered in a running candle. As soon as markets went above this, I counted till one, two, three, four, five. Okay, market sustaining, entered into calls. Initial stop losses around here, market came till around here, and then the result is in front of everybody, right? So this was a good one-side momentum-based trade which we had taken, entered around uh, on this candle. I exited the trade around this particular candle. The reason being this red candle that you see, the 1035 candle, it fulfills three conditions. The high is lower than the previous candle's high. The low is lower than the previous candle's low, as well as the closing is below the previous candle's low. So these are the three conditions that I use for my trailing. If I see any candle like that in a good setup or a good trade which is moved up in a, with momentum like this, that is where I plan my exit, and this is where I had exited. So this was the first trade of the day. Now the second trade of the day was the short that I had done over here. I have also explained this particular trade in the RSI video that I had posted on Friday. Now I'll just remove RSI from the chart and I'll ask you guys, with market giving a move like this at the start of the day, will you be willing to short the markets around here when while the markets are still near the day's high? I trust not. Nobody in their right mind would be willing to short a market like this, that too near the day's high. But what made me short the market around here and capture this entire fall? Well, the answer is in the only indicator that I use profusely, and that is RSI. While the market was making higher highs, RSI was making lower highs, which is a negative divergence. And I use RSI only for this. Anybody who is not aware of this particular concept, please go and watch the RSI video. I will pin that in the uh, at the end of this video. You'll get a link to that particular video as well. Go and watch that video, and you will learn the right and effective way to use RSI in the simplest way possible, right? And again, I'll explain the trade here as well. It was not just because of the negative divergence on RSI that I had executed this trade, but also a double top formation, which was the RSI divergence confirmed with the price action, is where I created a short entry over here. Obviously, the quantities were lower than what I than the trade which I had executed over here. And I was tightly trailing the position, as in case if it would have reversed up here above the high, this particular swing high, which was the original SL, I would have exited the position without giving it a second thought. Markets gave me good 15 minutes of momentum post the entry, and I exited around this green candle which had formed around it. And see, the kind of bounce in the market was also equally ferocious. Now, these were the only two trades that I had taken, one long entry around here and one short entry around here. The reason was in this particular move, there was no setup of mine that could have captured this move. We should not chase every move in the market, or we should not have a FOMO of a move like this that we have missed. No, absolutely not. There will be days when you will be missing out something like this, and in case if it is not as per your setup, have you actually lost anything? I believe no. Then came this particular move, which was around 3 p.m. I usually do not initiate fresh trades post 2:30 to 45 p.m. because I don't want to hold on to the trades overnight. Plus, because obviously markets are closing, so you need to close those positions. And I don't want to take unnecessary risk, especially on a day when you have had two good trades. And that was the reason why I did not execute this particular trade, although it was a good trade. If you look at it, this is a, sorry, this was a nice uh, pole and flag consolidation breakout. But obviously, it was beyond the time wherein we initiate fresh trades, wherein I initiate fresh trades, and that was the reason I did not participate in this particular trade. And anybody who would have participated or tried to take an entry around here would not have made much of a killing or very good profits. The reason being India VIX, which had dropped down by around 5% today. And that was the reason while this move came in, the prices of puts went crashing down, but the calls did not see the same uh, proportionate move in the option premium prices as the spot had moved, right? So these are the things that you need to keep an eye on, and that is exactly the reason why VIX is one of the most sort of. So what I do is in my Zerodha account, uh, at the start of the trading day, based on where the market is opening, I put out all the strike prices in the expiry that I am trading in, and above everything else, I put India VIX. So India VIX is also there in my watch list around here, but I try to keep this minimized so that I can use the maximum of my screen space. I do not use a multi-screen trading setup. It is just my laptop and two phones that I trade with. So that is the reason try to use the maximum real estate of screen around here. And I put out the option, the VIX in as a thing, or as a in the watch list in the Zerodha watch list, and so that I can keep an eye of whether VIX is going down, coming up. And I try to remember it in absolute percentage terms. In what percentage is, say, for example, it was down 4% earlier, but now it is only down 3%. That means VIX had slightly increased. So that is the kind of monitoring that you guys need to also keep in case if you are taking trading seriously. Uh, so yeah, that's it for the trading part of this particular day. And now we'll start with the analysis for Monday, which is 23rd. Uh, Today's video, we will be doing the weekly, we'll start with the weekly analysis. I'll just remove all the drawings for the time being. See, if we are to look at Nifty on a weekly time frame as well, we are still very much within the 12th May weekly candle, which is there. Apart from this brief time that we broke out of it and then again came back inside the range, we are still broadly inside this particular range. And until and unless we move out of this range or we come back down around here and then we break down below this, we'll not see a good trending move, right? On a daily time frame as well, if we see, we are inside this particular range. We are going up, we are going down, we are going up, we are going down. There's no particular market structure base. So this is what is the third kind of market. So there are an uptrending market, a downtrending market, and a sideways market. So right now, what we are stuck in is a sideways market. And I have a suggestion for all the followers of my channel or anybody watching my videos. So Nifty is right now stuck in the consolidation, and now is not the time to play it aggressive, right? Uh, so we can look at some scenarios wherein we can see Nifty breaking out above the consolidation zone and then sustaining, giving us a sustaining above these levels, above this particular high, and that is where we can see a momentum-based trade on the upside or a trending move on the upside. Or in case if Nifty fails to break out above this particular zone and then again comes back and say for example declines and comes back around 24,500 levels and breaks it, then I believe we will be again coming down to some lower levels and again we can see some trending moves around there. But till the time that we are stuck in this range, I believe we will not be seeing any trending moves, and there will be a lot of trapping going on inside this particular move, right? This is the same scenario around here. If you go on any time frame, we are completely sideways. Now, how we plan and manage our trades while we are in this sideways range on an intraday basis is something that we need to look at. But like I said, until unless we move out of this particular big sideways consolidation, we'll not be seeing any good I'll trending moves. For Monday, I'll delete all these. This was the retracement level from top to bottom. This was the 0.5 to 0.618 retracement. We have already crossed back above it, so we will be deleting this as well, right? On a weekly time frame, I will just be marking the high of this particular candle. Now, why is this particular high? And I'll also change this color to green, right? Because most of our rays that we use for daily time frame are red in color, but we'll change this color to green. Try to understand this was a negative weekly candle. The next candle is an inside bar, which is a positive weekly candle. If we are to break above this and continue on the daily time frame, we can see expect some good momentum, right? So this is a level that we need to keep an eye on, and that is the reason we have it here. We are extremely close to it. For Monday, our initial first trade will again shift to the red based on our intraday setups. We will be looking at a trade around these levels, right? On the long side. Say, for example, we open flat, spend some time here, break out, pull back, very good trade. We'll get on the upside. And above this particular zone, say for example, we are entering around here because we are very close to the breakout, or not the breakout zone, but the uh, sideways consolidation high, which this is the high of the sideways consolidation. And in case we are moving out above this, this is the place where I will be looking at adding quantities. If we open with some gap up, I'll wait for price action around these levels, and then again I'll be planning a long entry. For a short entry, as I say, we will not be predicting anything, but we'll be prepared for anything. I will once again be using Fibonacci and we'll be marking the so of this entire up move of today, com as well as the low that was made on Thursday. This is the 0.5 to 0.618 zone, and we will look at a short trade only below this, right? And mm, today was a good trending day. I am expecting Monday to be a bit on the sideways side, right? So Monday, keep your quantities low. Avoid the trading if possible at all on Monday. There is no harm, but in case if you get some good setups, obviously you can go for it with lower quantities. But we'll definitely be planning this. In case of a gap down, I am again assuming market will turn a little volatile because market has closed near days high with such a good trending moves, and there would be a lot of people who would have carried overnight longs, and they would be reacting to the opening, obviously. So I believe this will be the simple plan of action for Monday. However, Monday I am expecting it to be a good sideways day, which should consolidate around the high of this candle, and then Tuesday will be a very good trading opportunity. So these are certain scenarios that I am building up in my mind. Maybe Monday will see these lows being taken out, prices move near the lows, and then again maybe close, maybe form a doji, whatever it is. We'll not predict anything. We'll see what happens. But Monday, I'm not expecting any good momentum-based trades. I might be wrong because market has the tendency to surprise everybody. What everybody is expecting, market does not usually do that. But yeah, that is something which usually happens after a trending day. The next day is usually sideways. Say, for example, this particular day, which was a good trending day, the next day was mostly sideways, right? If you see, apart from the fall around here, the complete day was sideways. So I'm expecting some similar movements around here, right? So that is something which we'll look and decide once that happens in the live market. Uh, but our job is to plan our trades and then trade those plans, right? And all I would say is have a good weekend, and I'll see you guys again on Monday post the market. Till then, stay safe, have a good day. Thank you so much. Cheers.